Doing well today. It is Friday, December 3rd, here for our quick run through of what we're doing in the markets, how we're looking at things in the BTX method. And yeah, I got rid of the beard, got rid of the long hair, looking all clean shaven and new coming into the new year. So yeah, fun stuff. Lots of stuff going on in the news this morning. We had non-farm payroll just a few minutes ago. Well, yeah, about 10 minutes ago. Uh, had non-farm payroll a few minutes ago. Huge miss on the jobs numbers. 210 actual on a forecast of 553. Unemployment, however, somehow got better. Just whatever, you know. I don't even know what to make of these numbers anymore. End of the day, the numbers, what comes out of this is totally irrelevant. What you or I think of the number, what you or I think it means, how to interpret it, what anyone else thinks it means or how to interpret it, totally irrelevant. What we need to focus on is the price action and utilizing the trading method that we are currently employing, right? That's all it comes down to, guys. What happens in the news, the rumors, the facts, uh, how big of a delta there was between the forecast and the actual, uh, all that. So what? Take a deep breath, don't worry about it, because it doesn't really matter at the end of the day. If we're trading and we're using a system to make decisions, which takes our emotion out of it, then all we have to do is be consistent in our application of that process. And that's what we'll do today, just like we do every day, right? I'm going to run through what we're looking for today, what we saw yesterday, and then I'm going to go through where we are for the year so far, and talk about what we've got over the next couple of weeks, and then I'll show you another thing that I've been working on with a buddy of mine up in the Northeast, and we'll give you kind of a sneak peek of something that we may be ready to share early part of next year. So anyway, here we are. So running through the numbers, let's start with the S&P. We'll get to crude, we'll get to gold. S&P with this push up, had a big move yesterday higher. We were looking for higher highs and higher lows, and then we wanted to see it break back down in the direction of its market trend. Never ended up getting there for us, so we don't have an opportunity here just yet. As we can see, higher high, higher low, it's giving us the signal, hey guys, check it out, might have something going on here. But then in the next candle, it didn't have that momentum to break back down, so we didn't have any trades yesterday. This morning, as we can see here, we've flipped over. So the 30-minute bias has flipped to a long bias while the 4 hours still short. So now we've got a mixed bias here in the S&P. So that means we're not going to do anything. We're just going to sit on our hands today, let the market shake out, which, after a big news event like this, especially with what's going on, not a bad idea just to sit it out anyway when you've got so much potential conflicting information. So what's happening over in crude? Well, in crude yesterday, we were looking for shorts. We wanted to see short trading opportunities, and we did. We saw the market start pushing up, higher lows, higher highs, higher lows, higher highs. It's pushing higher and higher and higher for us on crude. Did break back down in the direction of that market bias. We can see here, it broke it, but then immediately went back up and took us out. So we ended up getting taken out there. This was not a trade. It looks like a really small, like a small amount of risk, but actually that was about 780 on a full lot. And remember, as we've talked about before, we're trading full lots on our model portfolio that we're tracking because that's how we started the year, right? Coming into next year, we can chunk this down now that we've got micros, which came in still earlier this year, but well after we had started the tracking process. We'll use micros beginning next year, and that'll allow us to size up, size down trades as needed. Coming into today, nothing going on for us. We've got a mixed bias. The 4 hour is still short, but the 30-minute has flipped over to a long bias. So the 30-minute bias is long. So I'm not going to do anything with crude until we get a confirmed bias. Gold is still looking short, 4 hours short, 30 minutes short. Yesterday, we wanted to see the market start pushing higher, making higher lows, higher highs, higher lows, higher highs. And then we wanted to see it break back down in the direction of its market bias. It did, but ultimately, same thing here, broke back down, filled it, and then popped back up and took us out. Same bar, same candle. So ultimately, no opportunity there. Well, it was an opportunity in gold, but it was short-lived and lost about 1% on that in the model portfolio. Today, we're looking for the same thing. We're looking for shorts. So we'd like to see it float up, float higher, and then break back down in the direction of its market bias. So that's what we're looking at. That's what we're looking for. We'll see if things play out. If they do, great. If they don't, that's fine too. As far as the rest of the year goes, today is the beginning of the year. We're here at December 3rd, which is a Friday. We've got really a couple more weeks before things start slowing down for the Christmas holidays. So we've got all of next week, all of the following week for sure. That week of the 20th is when a lot of kids will start getting out of school for the Christmas break. You'll see families start going on holiday. More than likely, we'll start seeing volume fall off as well, because you've got major players that are going to start dipping out of the market here. What does that mean to us? Does it mean you can't trade? No, you can absolutely trade if that's what you feel like doing. Markets are going to be open. But is it the best time to trade? Could the moves be more volatile, more wild? They could be. It doesn't mean they will, right? Nothing means certainty, right? There's no certainty in what we're doing. Just because something may happen doesn't mean it will happen. But certainly we're looking at that week of the 20th as being the time to dip out. So for me, I've got the next 2 weeks, and then beginning the 20th when my son's out of school, I'm not looking at anything in the market until we get into back into January. Most kids are probably out of school for the first couple days of January as well, maybe even that full week. But that January 7th will be non-farm payroll. The 5th will be the ADP release of the employment reports. So if anything, start looking at that Wednesday, the 5th or the 6th to come back into the market at that point. So that's kind of what we're looking at there for the rest of the year. But we do have another 2 solid weeks of trading, of tracking, and we'll show you what those results are. We'll use like the 17th or the 20th to do just that final year-end wrap around where this method was, how it played out for the year, all that good stuff. So we'll do that on that 17th or the 20th before I dip out and just focus on spending time with my family. As we do every day, but even more so without having anything to look at or worry about in the mornings, right? So what else? What did I want to show you over here? I'll show you this. It's pretty cool. I've mentioned this before. Oh, I guess for some reason I don't have all my screens loaded in here. I'll have to pull this over. I mentioned this before. I've been working with a buddy of mine. He's a quant, formerly worked for some funds up in New York. And for the last 15 years, he's been on his own, using his coding skills to write his own stuff and trade his own stuff. And we talk pretty frequently. He's a really good guy, and he's been sharing a lot of the stuff that he does with me, and we've been talking about ways that we could utilize that to help people. And we're looking at making 2 things available at some point. I don't want to make them available until I've fully tested them myself personally, but we're looking at one that's a trade copier, and we're also looking at one that just is something like we're seeing here that gives you the kind of the signals of what's happening and how it's happening, and if you just wanted to utilize it to make your trading decisions in the marketplace. So it's pretty darn cool. It's pretty high tech. It's got a ton of moving parts in the back end, as you would imagine from somebody he's math-based quantitative analysis, for the markets. But it's pretty darn slick. The red lines are where it's lost. The blue lines are where it's been winning for us, and you can see, pretty wicked stuff. So anyway, we'll share that with you as time goes on, and we're ready. I've mentioned this a couple times over the last few months. Not there yet with some, there's one thing of using it personally, and there's another thing of making something commercially available or more widely available to people. You've really got to strip a lot of pieces out that you might understand that other people may not fully grasp, and you've got to simplify systems, right? And we're taking something that's really, really complex that we use and look at and use it to make decisions, and we're stripping it down a little bit to try to make it more automated, and I don't want to say hands-off because it still needs to be hands-on, but less hands-on required. So anyway, that's where we're going with that. It's pretty darn cool. And speaking of results, I failed to put this up. I'll put this up here, and then we'll get done. This is where we finished the month right here, about an 8%, 8.5, almost a 9% gain. Oh, you're not looking at my screen. All right, so here's all the trades that we took in the model portfolio over the course of the month. Looking pretty good. I will tell you this, it was light. I mean, we only had 3 potential trades in gold. We only had 4 in crude. We only had 5 in the S&P. So pretty light, but overall ended with about an 8.5% potential gain there. I will tell you this, 8% gain, who would think that's possible when you only have a 38% win rate? It all comes down to winning more than you lose. I'd say this over and over and over. People get so focused on being right that they forget to focus on what matters, which is consistency and being consistent in the marketplace. And so we're winning more than we lose. Our average win was about $500. Our average loss was about $2. That's significant. That gives you an edge. That's all you need for an edge. Be consistent in your application, win more than you lose. That gives you the edge in the marketplace. Over the course of the year so far, we're sitting at about a 77% gain on the model portfolio that we're tracking. And that's not using any kind of compounding or anything. That's taking every month and saying, hey, if we start with a $10,000 account every month, this is what we made this month, or this is what we lost this month. You see drawdowns, like we had a 10% drawdown in October. But overall, we're seeing consistent, win. That's all you need to have an edge. You don't need to win every time. You just need to win more than you lose and be consistent in your application. All right. So I'm going to go. I got to get out of here. I'll talk to you guys soon. We'll see what the market brings for us today, and we'll be back on Monday to talk from there.